Hello everyone and welcome to TBR's webinar, Seeking New Avenues for Growth, Insights from TBR's Enterprise Networking Market Forecast. I'm Justin Surgent and I'm hosting today's session. The enterprise networking market is undergoing unprecedented transformation, with increasing customer adoption of cloud and software-defined networking pressuring vendor revenue growth in traditional hardware-focused segments. However, there are still ample growth opportunities for vendors in areas such as wireless, security, and services. Today's webinar will cover findings from TBR's most recent enterprise networking market forecast, and will speak to the enterprise networking market opportunity in key segments and geographies. Before we begin the presentation, there are a few housekeeping items I'd like to cover. First, we'll be recording today's presentation and posting it on our YouTube site, TBRI channel. We encourage you to visit this channel to watch this presentation or any of the others we've posted. Second, we'd like to hear your thoughts and opinions on the material we're presenting. Please send any questions to the Q&A function. We will address them at the end of the presentation. Third, we'll send out the slides to everyone registered for today's webinar within 24 hours of the conclusion of the presentation. You can also find the slides of our other webinars on our SlideShare at slideshare.net/TBR_market_insight. Now let me introduce the analyst presenting today. Scott Dennehy is a senior analyst in TBR's data center practice. He's responsible for directing TBR's enterprise networking research, which includes SDN and network infrastructure services. Scott also contributes to TBR's broader data center research, tracking vendor activity and customer behavior in areas such as cloud infrastructure and converged systems. And with that, let me hand this over to Scott.
Thanks, Justin, and welcome everybody. Thank you for joining today. So as Justin said, we're going to cover some of the key findings from our most recent enterprise networking market forecast. So this is a forecast that looks out over 5 years into the enterprise networking market, and looks at the forecast, or looks at the opportunity within some specific segments as well as geographies, as Justin mentioned. And before we start, I think it's important to understand how we define the enterprise networking market, and a couple things to keep in mind as we go through. So from TBR standpoint, enterprise networking is much more than just routing and switching. We include things like network security. We include wireless LAN, even unified communication. So a better definition might be to define it as networking and communications infrastructure. So as we look at the opportunity and vendor market share and those kinds of things, just keep that in mind so that we have the right context. But essentially what we'll be covering today are 3 key topics. First, in terms of the overall market forecast. So what we're looking at over the next several years is a market that in 2014 was roughly $78 billion, but will grow to roughly $99 billion by 2018. So that's a compound annual growth rate of just under 6%, and a lot of that driven by things like cloud and mobility and security. Now, we expect that most every market segment will grow. However, the degree to which they grow is going to depend largely on the maturity of those particular market segments, and we'll get into that quite a bit. We'll talk a lot about the vendors in terms of those vendors that are leading their specific markets, particularly in terms of market share. As you might expect, Cisco is the dominant market share leader, and we expect them to continue to be over the next several years, based on that end-to-end portfolio and their ability to crank up the sales and marketing machine. That said, there are plenty of opportunities for other vendors to grow within some of these specific market segments, particularly vendors that have some industry or niche technology specialization. So whether you're talking about F5 in the application delivery space or Microsoft in the unified communication space, as well as vendors that have some other kind of differentiation. So a good example is a company like Huawei that has price differentiation over many of the other vendors out there, and that's going to be a big driver in terms of their growth. We'll also talk about vendors in terms of those that are lagging the market, and essentially why they're lagging the market, and more importantly, what's going to happen to them if they continue to lag the market. I presented a webinar a month or so ago on vendor business models. For those of you who were able to attend, remember that I talked about those vendors that can't make this shift in their business model to accommodate the industry shift away from hardware towards things like software and services are really going to see their revenue and margins erode, their market share erode, and unless they can make that shift, and if they don't have the financial flexibility to make that shift, they'll become acquisition targets for either other vendors in the marketplace or private equity firms. So first, let's talk about the forecast itself. So what you see here is the overall market forecast in terms of the individual segments. And as I mentioned at the outset, as you can tell by looking at the graph, most every segment here is going to experience some level of growth. However, that growth is going to differ significantly depending on the segment. So looking at the chart here, you see at least in 2013, the biggest segment was network infrastructure. So that's that first dark green bar. Above that is wireless. Above that one is unified communication. Above that one, security, and then finally services. So as we move through the forecast period, what you see is the contribution of revenue from segments like services and wireless and security is going to grow, whereas the contribution from, call them the traditional hardware segments, so routing and switching is part of network infrastructure. We include things like IP telephony in the unified communications bucket. So those are the market segments that are not going to grow nearly as quickly. Just to give you some numbers behind this, so if we take the combined revenue from those two hardware segments, network infrastructure and unified communications, what you get in 2013 is a revenue contribution of roughly 54.4%. By 2018, that contribution drops down to about 43.3%. Conversely, if you take the combined revenue or market opportunity in wireless, security, and services, that's a 45.6% contribution in 2013, jumping up to a 56.9% contribution in 2018. So that's kind of how the mix is going to shift as we move through this forecast period. And really the drivers behind that from a traditional hardware segment point of view is obviously things like cloud and SDN are going to have somewhat of an impact on those traditional segments as the appetite and those segments kind of move more towards cloud and software consumption and delivery models. Services is going to become a really important part of that, particularly areas like consulting, as vendors look to engage with their customers in more of a kind of services-led or consulting-led type of model. That said, obviously there are hardware pieces to the security and wireless market segments, but because of the demand for those segments in terms of wanting to secure the network infrastructure, the increasing impact and demand around mobility for employee productivity or revenue generation, if you're talking like a vertical like retail, that's really going to be the big drivers of those segments. So yeah, those two segments in terms of security and wireless do have a hardware component to it, but because the demand for those technologies is so strong, we expect that growth trajectory to remain so sharp, at least in terms of an upward trajectory. So let's talk about a couple of different forecast scenarios that we could see unfolding. So as I said, our estimates show a $99 billion market by 2018. Now that could go up or down anywhere from up to 15%, depending on a number of factors. And I think in terms of a best case scenario, really the big driver there is going to be what kind of impact does SDN really have on the marketplace, and what direction does that go? So you have to understand when we look at SDN from an enterprise perspective, we're not really counting what's happening in the telecom and cloud provider space. So what Amazon and Google and Facebook and AT&T and Verizon are doing in the SDN space isn't really accounted for here. We're talking about the broader enterprise market and some of the other verticals. So that market is still very nascent, and I think it's a little too early to tell exactly what approach is going to win. And if the companies like Cisco and HP have their way and that becomes more of a hardware play, then I think that bodes better in terms of will drive more growth and contribute to a larger market by the time we get to 2018. Now, on the flip side of that, whether or not we fall below that $99 billion mark really depends on what happens in certain geographies, and we'll get into the geographic forecast in just a bit here, but if you look at what's happening in some of the geographies, particularly some of the emerging markets like China and Brazil, where it looks like demand is slowing, if that continues to happen and those economies don't hit some of the GDP growth rates that they're expected to, that could have a significant impact on the growth opportunities for some of these vendors that are really looking to the emerging markets to fuel their growth over the long term. So that's going to be a big determining factor as far as a worst case scenario if that growth doesn't continue the way that it's expected to. But ultimately, I think what we're going to see in this market is that the move to cloud and what we call software-centric IT is no question going to happen. It's a matter of what form that takes. And I think where you'll see that impact is some of those traditional segments like I talked about, network infrastructure, unified communications. But I think at the end of the day, most of the vendors in this market forecast will grow to some degree, and that's going to drive that $99 billion market, or that 5.9% compound annual growth rate through 2018. All right, so let's talk about the geographies for a second. And as I mentioned, I think the big driver here and what a lot of the vendors are really counting on is the emerging market. So one thing that's really contributing to this 6% growth rate over the next 8 years is a couple things. First and foremost is the improving spending and the improving demand trends that we're seeing in the developed markets. Most of the vendors that we cover are seeing a lot of demand and being able to capitalize on that demand in places like the U.S., particularly in verticals like healthcare and financial services and public sector. And over in Europe, it's countries like the UK and Germany where that demand is on the rise. We're even starting to see signs of improvement in places like Southern Europe, which has been down for I think as long as anybody can remember. So when you look at the developed markets and the demand trends there, that obviously makes up a big chunk of the market. So that's going to be a big driver of growth. But again, it really comes down to the emerging markets in places like APAC and what happens with China, and in Central and Latin America, what happens with Brazil and Mexico. And if the growth rate continues, even if it's a little bit slower than has been in the last couple of years, I think there's ample growth there to really drive that ultimate 6% growth figure as we move through 2018. So I want to switch gears a little bit and turn the discussion over and talk about the vendors. Now, what's really interesting about this market is it is fragmented to a certain degree. Obviously, you've got Cisco as the largest 800-pound gorilla, so to speak. But as you can see from the chart here, there are lots of other vendors that are experiencing growth. And I'll put some numbers behind this chart in just a second, but what this chart shows is you've got, obviously, again, Cisco, the revenue leader, some low single-digit revenue growth. And if you look at kind of that low revenue, high growth quadrant, and you see all the mix of vendors that are in there, these vendors have, as I was saying at the outset, some kind of specialization or differentiation that they're able to achieve that drives that growth. And we'll get into some specific examples in a second. But that's really where the growth is for a lot of these vendors now and will be in the future. It's how can they specialize in a certain market segment? How can they differentiate to drive that growth? And I think that's really key to competing with companies like Cisco. And I think where Cisco is maybe most vulnerable is to some of these vendors that have some specialization within a particular market and are able to maybe move a little bit faster or price their products a little bit cheaper or be able to be a little bit more technically innovative from that standpoint. But on that kind of low revenue decline quadrant, there's a few different things happening there. Some of it is what I touched on at the outset as far as the inability to quickly move and shift their business model from legacy hardware or what have you, more towards some of these emerging segments like cloud and SDN. Some of it's intentional as far as business model transformation. So when you look at companies like Juniper and Unify, they're taking intentional steps to reorient their business. So obviously there's a revenue decline that's going to come with that in the short term, particularly as they exit businesses. So you look at a company like Juniper that's divesting some non-strategic businesses, and there's speculation that they may exit the enterprise business entirely. A company like Unify that's essentially abandoning their hardware business, laying off roughly half of their employees as they try to reorient themselves and position themselves for growth in software and services. So some of it is intentional, but as we'll talk about in just a second here, there are industry shifts that are taking place that are impacting vendors in different ways. So as you can see from this chart, the chart I showed you before, the vendor positioning looks relatively the same, but now we've got some numbers behind it. And this shows for the full year 2014, total enterprise network vendors for the 15 or so vendors that we track in our enterprise networking vendor benchmark. And again, what you see here, and I'll highlight and use cloud as an example to illustrate what I've been talking about. So you've got on the growth side of this bubble chart, you've got vendors like Citrix and F5 that are really leveraging the demand for cloud to drive growth in their businesses. These are companies that their products help optimize the network for cloud and help secure the network for cloud. So this has been a big driver for them. You've got a company like Microsoft that has the assets and the capabilities to quickly shift its traditional on-premise software-based model to cloud and unified communication. So that's really been a big driver from them, or for them, in terms of their revenue growth. So if you, on the flip side of that, if you look at the revenue decline portion of this graph, you see, and we'll stick on the unified communications example, companies like Polycom, again, Unify that I just talked about, Avaya. These are companies that have a large business in, legacy hardware or product attached services that, with all that business moving to the cloud, it's going to become really important for them to make that shift and adjust that business model so they can capitalize on some of this growth. And I think that's been very slow to come for some of these vendors. That's why Unify is laying off half its workforce to try to make that shift as quickly as possible. Avaya is making some gains. Their cloud and managed service business is growing. It's one of the few areas of their business that is growing. It's just not growing fast enough to offset the decline in some of the legacy business, and that's why you're seeing them where they're positioned on this chart. So now let's talk a little bit about market share. I won't spend too much time on this slide, as I'm sure there's no surprise here to see Cisco owning roughly 45–50% of the overall market, again, including everything, not just routing and switching. The routing and switching portion is obviously much higher than that, but when you include unified communications and collaboration, security, and wireless, that number comes down a little bit, but still a dominant market share position for sure. In fact, no other vendor, with the exception of HP, is getting more than 6% market share. Once you get past Cisco, there's a lot of companies that are kind of nibbling at or trying to get their crumbs, so to speak. Now, you may ask, how do companies like IBM and Fujitsu and Accenture show up here? Because they obviously don't have a networking portfolio that they're bringing to market, but for them, it's about the services. So the amount of services that they're doing around the network is so significant that it actually puts them in the top 10 in terms of the overall marketplace. Now, again, as some of you may have heard me talk about in previous webinars, or for those of you that subscribe to our network infrastructure services benchmark, you know that these IT services firms like Accenture and Fujitsu, they're not necessarily going to market looking just to do services around network infrastructure. For them, the network component is part of a broader solution around topics like cloud and mobility and security. So they're performing services around other components other than network infrastructure. Could be data center server and storage, could be endpoint devices, software, all those kinds of things, and network infrastructure that's tied into this broader solution. So that's really the driver of revenue and how they're a piece of this market from a services point of view. So there's a little bit of a different view in terms of market share, and this is a good way to illustrate that fragmentation I was talking about a little bit earlier. So here's your top 15 vendors in terms of overall market share and the positions that they occupy within some of these specific market segments. So, obviously Cisco has the #1 spot in all 5 segments that we track, and HP is really the only other vendor that is even cracking the top 10 in some of these other sections or some of these other segments. So once you get past HP, again, what you see is a fragmentation and vendors playing in a lot of different spaces, but not to a good enough degree where they have enough to really challenge Cisco from an overall market perspective. I think in terms of vendors here, there are certainly companies like Huawei, like Avaya, like Brocade that have the portfolio that can challenge Cisco. They just don't have the market position. And then we've been talking about specialization and how that can drive performance. So again, when you look at some of these specific segments and you look at a company like Microsoft, that's #2 in unified communications, but they're really not playing anywhere else. Avaya's got a top 3 position in UC&C and a top 5 position in services, but nowhere else are they showing up within having a top 10 position. So having some specialization and having some differentiation in some of these market segments can really help drive performance. But again, in terms of competing at a high level across the board, really difficult thing to do when you're talking about Cisco, who's got such a dominant share position across all 5 of the segments. So lastly, I just want to give you more of a forward-looking view in terms of what we're expecting in terms of market share, and also another illustration of how some of the concepts I've been talking about, specifically around the impact of cloud and SDN and how that's impacting vendor businesses, how that's going to equate to market share, particularly if we look at the top 5. So as we look on this chart here, what you see is the top 5 vendors for 2014, and then what their market share is, their estimated market share, and what we expect that market share to be in 2018. And what you can see here is, Cisco is #1, HP #2. We expect that to potentially remain the same. But if you look at a company like Microsoft and what they're doing in unified communications, and then you look at a company like Avaya and kind of what their business model looks like now and what they're trying to do, the speed at which Microsoft is making this shift and adapting to cloud is really going to pay off for them in terms of their ability to climb up the ladder in terms of market share. And from Avaya's point of view, as I mentioned, they're making some steady progress in that area, but I just don't think it's going to be fast enough. And what that's going to do is erode their market share and even potentially knock them out of the top 5, depending on how some of the vendors below them do and how quickly can Huawei grow, how quickly can F5 continue to grow, and do they have enough scale, and can they grow quickly enough over the next 4 or 5 years to crack that top 5? So just a view in kind of what we expect in terms of changes in the top 5 market share vendors in the enterprise networking market through 2018. So that's kind of the end of the content portion of this that I wanted to share. I do wanted to provide a little bit of more information on the report that some of these insights come from. So this, again, came from our Enterprise Networking Market Forecast that just published a couple of months ago. This is a report that we publish twice a year, and what you see here is a little bit more of a breakdown in terms of what is in the report, highlighting the specific segments that we cover. So each segment here under the segment forecast has its own forecast and analysis around that, drivers, vendors, all those kinds of things. Same thing with the 3 geographic regions that we cover. And then we've got a pretty significant market share section that not only looks at the total market that I've shared with you, but actually provides some market share for each of the individual segments that we cover, not just in terms of current year, but again, that forecast that I alluded to just a second ago that provides the market forecast across each of these segments in terms of market share. And then some more data in the appendix in terms of our methodology and some of the definitions that we use for these segments that we cover. So with that, I'd like to turn the call over to Justin for questions.
All right, so if you have any questions, let me
question content, please send them to the Q&A function. Now we'll get started. All right, so the first question. Which market segments do you expect to see the most consolidation?
Yeah, that's an interesting one. I think the way that I would look at that is what segments do I think acquisitions are most needed, and which segments have the best opportunity in terms of companies that could either move the needle most, whether it's in a market segment that's still emerging. I think SDN is one where we are going to see some more consolidation. There was an initial wave of consolidation back in 2012 as this market really kind of burst on the scene, for lack of a better phrase, and we saw companies like Juniper and VMware and Brocade, kind of make their acquisitions there. I think once adoption of SDN starts to take off, I think you'll see another round of consolidation as vendors kind of look at once they get a feel for which direction this market is moving in, they can look at their portfolio and see where they have potential gaps. And some of these vendors that are out there, whether it's a Big Switch or a Cumulus or a Plexi or what have you, those are the vendors that could get acquired. We saw Cisco acquire Embrain just recently here. This is kind of that layer 4 through 7 gap that they had. I think what will be different than 2012 is instead of just looking at technology, vendors are going to want to see, okay, what's the technology of these vendors, but what is their customer base too? Can they give us an in, and do they have some key customers that maybe can come along with this acquisition? So I think SDN will be one. I think wireless is one where you could see some more acquisition. Obviously, HP had the acquisition of Aruba recently. That was the big one, but there are still plenty of other vendors out there, whether it's a Ruckus or an Aerohive, where you could see some other vendors make a similar play for wireless, as that market, as we've talked about, is going to grow at a pretty fast clip over the next few years.
All right, next question. Arista was not mentioned. How are they doing?
So, yeah, from a market share perspective, I'd have to get back to you on the specifics. Obviously, they play in what we would consider the network infrastructure market space. I would suspect that they're a top 10 vendor there, but I could get back to you with some specifics on that. They're certainly a vendor that's growing very quickly. They've got the strong position in financial services. The key to them is how can they scale that business and start to break out into some of these other industries. They've got a very talented management team. They've got a very strong product, so they're certainly one to watch from a core routing switching point of view. But I can get back to you on specifics as far as where their market position is currently with respect to some of the other vendors. But again, because of the other segments that we include here, their business just isn't big enough yet to crack that top 10 or 15 in terms of the overall market.
All right, next question. Will SDN define a new market segment, or will it be a combination of the current segments?
Interesting question. I think, what's interesting about SDN is it does have the potential to impact a lot of different segments. I mean, most of the action is in the data center right now, but you've got opportunities in the campus and in the WAN and even wireless for software-defined networking. So I think it has the potential to impact a lot of different segments. So, but in terms of our forecasting and how we're looking at it, we're considering at least initially as part of the network infrastructure segment. And that's, at least in terms of the forecast, that's where we see that, or SDN, impacting the market the most. So it'll be interesting to see how that takes off and if it does enter some of those other market segments. But I think initially it's going to be, again, most of the action is going to be happening in the data center as enterprises start to look at what Google and Facebook and Amazon are doing and start to replicate that model to see if they can get some of the same benefits.
All right. OpenFlow, is it being adopted in the market or still experimental?
We're actually getting ready to go into the field with an SDN customer study and get some specifics around adoption, and OpenFlow is certainly some of the things that we're going to be asking about. I'd have to say that I think it is being adopted, but I think it's far from an industry standard. and I think that the SDN market has a long way to go in terms of standards before we start to see that get adopted. I think you know, the OpenFlow discussion reminds me of the early days of networking, you know, 20, 25 years ago when it was, you know, ATM versus IP, you know, who's going to win. So right now OpenFlow is, I would call it the de facto standard, just based on its history and the support that vendors are putting behind it, at least from putting support for OpenFlow on their products. But I think it's a little bit too early to tell as far as whether or not that's going to be the standard moving forward.
Extreme Networks was not mentioned. How are they doing after their entry?
Sure. So I'll answer that in a similar fashion to how I answered the Arista question, in the sense that they do have a broader portfolio, but the scale isn't quite there to track the top 5 or even the top 15. I think they're, even with the acquisition, I think their run rate is maybe $600 million. And I know that they've really struggled to grow even with that acquisition. I think that the Enterasys acquisition made sense in terms of the portfolio boost that they could get. The presence that Enterasys had in markets like higher ed, I think is going to help them. I don't know if they've got enough to really make some noise in the market going forward. You know, that remains to be seen. They're actually one of the vendors I kind of have on my acquisition watch list, and I don't know if any of the other existing vendors would be interested, but I could see down the road maybe a private equity firm coming in and taking ownership of them. They certainly got some work to do from a market perspective in terms of growing, and obviously that market is extremely competitive, and the fact that they've been around so long but just haven't been able to move the needle, I don't think bodes well for them moving forward. But we don't cover them as closely as we cover, you know, Cisco and HP, so I don't want to sound too negative on them, but just looking at it from an overall business point of view, they've got some work to do.
All right. VXLAN is popular. How is NVGRE doing?
So we don't, you know, TBR doesn't cover the market at that level in terms of a technology. So I'd have to think about that a little bit and try to get back to you and look into that a little bit. I think, you know, what's interesting is I think VXLAN is getting some more play. I think it appears to be a pretty good middle step or transition into SDN. That's an area that we're seeing companies like Cisco come out with more features around their products, and so I think you'll see that as customers look for a migration path into SDN, and I think VXLAN could certainly be a part of that. NVGRE I'm not as familiar with, but we can take that down as an action item to do a little digging and get back to you.
Right. In which markets do you think Cisco is most vulnerable?
So it's really hard to say. I think from Cisco's point of view, what they have going for them is they've got plenty of money to buy themselves out of trouble, so to speak. So, and I'll use SDN as an example. They can figure out which direction the market is going and then quickly make a purchase, and they're not really limited in terms of what they can do financially. Really what their limitation is their revenue growth and margins that their investors expect from them. So in terms of vulnerability, I don't know if there's one particular market segment that they're in more vulnerable than one or the other. It's, for them, the vulnerability is the overall expectations that are placed on them from investors. And so that's why I think companies like Huawei are so threatening to them, because of the low price play. They can beat Cisco in certain markets, you know, strictly on price, because they don't care what their margins are, where Cisco really has to be careful of that. Now, they've been able to, because of Huawei's issues in the U.S. market, particularly from an enterprise point of view, I guess an overall market point of view, that's kind of insulated Cisco a little bit. If Huawei finds a way somehow to break into that U.S. market, particularly in the enterprise side, I think Cisco would be in more trouble. So the net of it is, I don't know if there are specific segments where Cisco is more vulnerable than another, just because they have that cash that they can use to pivot their strategy and make investments where they need to. I think it's more, for them, the vulnerability is financial in maintaining that, the revenue growth and the margin expectations.
All right, I think we have one last question.
How will HP's acquisition of Aruba impact the WLAN space?
Yeah, that was a somewhat of a surprising move, only because I know that Meg Whitman has been talking about getting back into acquisitions for HP. I didn't expect one as significant so soon. I think it's a smart move from them. The first thing it does automatically is it pushes them right into the #2 spot behind Cisco in terms of market share. In fact, by our figures, it essentially triples their market share in wireless LAN. And I think it's going to be helpful for them because now you've got the Aruba portfolio, which has been very strong for a long time, and they've got some really strong capabilities in things like analytics and cloud-managed Wi-Fi. Now you can take that business and very quickly scale it using the HP, the scale that HP has. They can quickly scale that business, and then so from HP's standpoint, I think it's a good move overall. I think they did pay a little bit of a premium. There were certainly some other options out there that could have maybe done as much for them a lot cheaper, but I think they were willing to pay that premium to make that very quick leap in terms of market share and expand that presence in that market, which, as we've talked about, is going to grow very quickly over the next few years.
All right, and with that, thank you, Scott, and thank you, everyone, for your questions. You can follow both Scott and TBR on the Twitter handles listed here, and please check out our pages on SlideShare and YouTube as well. Additionally, before you sign off, we'd like to ask you to take a brief survey about today's webinar. Otherwise, we'll leave the chat function open for a few minutes to give folks a chance to ask any last-minute questions. And thanks for joining today's session. Have a good afternoon.